Office romance in the air. Let's talk to John Marino, editor of Reuters PE Hub. They were toying with us, weren't they? Will they? Won't they? It was up on the website, the press release. It was down, but they pulled the trigger. Office Depot and Office Max, right?
And they probably needed to do it. The big story here is actually for 2013's M&A picture. So far, the aggregate value of deals is already 50% almost of what it was in 2012.
Wow.
That's huge.
That is huge. All right, now folks are actually going to know, or they're not going to have to be confused about which is Office Depot or Office Max anymore, right?
I still can't actually straighten them out. All I know is that Office Max was bought, same coloring, same everything. It's going to be really interesting when they actually merge the stores together because they could close, I guess, up to 25% of their combined locations,
That's right.
which is going to drive their revenue down. Already, their revenue as a combined unit is going to be 25% less than Staples, which is actually probably good news for Staples shareholders. There's a little bit less probably for them to be worried about. However, if I was a potential LBO buyer, for Staples, I might want to back away. Now we're talking about a stronger competitor. They're going to streamline. There's obviously been some rumors floating around out there about Staples being a potential LBO target. I didn't buy it then. I don't buy it now. Look at, for example, here's a good one.
Okay.
Best Buy, they didn't get taken out. Now
Right.
the Office Max, Office Depot merger, that was a stock-for-stock deal, no cash involved, and that's probably a pretty good deal because ultimately we're talking about companies with declining margins and probably declining revenue streams.
That's right. Okay. All excellent points, John Marino. Thank you so much.
Thank you.
I'm going to trade places now with guests, and we're going to have Fred Katayama come in here, Reuters anchor. Hello, Fred, and we're going to take a look at the markets and see what the U.S. stocks are doing here. And we've got some red hours there, Fred.
Yeah, the S&P 500 down 0.5%. It's falling further from a 5-year high. Then again, S&P's up 7%.
Right.
So you can expect some profit. But weighing on the 500 is Apple. The stock is down 2%. Because it's the chief assembler of products, Foxconn,
Right.
hiring freeze over there.
Hiring freeze there. Okay, let's talk about gold. This has not been a great climate for gold. And now we have the FOMC minutes that are coming up later today. Phyllis, we're 6-month lows, prices down. Futures for February were down 1.5%.
And gold below key level of 1,600, breaking below that level, down about 1.5%. Two reasons why gold's been going down. Interest rates have been going up. That's always bad for gold. Number
Right.
two, investors are feeling more, in a risk appetite mode. In other words, they're getting more bullish about the global economy's recovery and its prospects, so they feel less of a need for a safe haven. The ultimate safe haven has always been considered gold. Plus, one more thing, some technical watchers look at what's called the death cross. That's when two moving averages cross.
Okay.
Last time that happened, bad omen, because in April, when that happened, it fell 10% over the next 4 weeks.
Interesting. All right, have we bottomed out? What do you think going forward?
No, it looks like we may keep going a little bit lower. Some traders are looking at levels such as 1589 or 1564 as the next ones to watch out for. And also look for the FOMC meeting that you mentioned earlier. Yeah. The reason is because last time we had, the minutes read, that was in January for the December minutes.
Right.
Well, it turned out that the way the market read it, the FOMC is considering slowing or stopping its asset purchase program. Any hawkish comments like that out of the minutes today, well, that'll be a big headwind for gold. The bulls are not going to be shouting eureka after that.
All right, Fred, let's move to the hot spot. And as we do, remember to check out those snaps at the bottom of the screen for more headlines of the day. Let's look at some stocks that are moving. Housing, kind of mixed news out of Toll Brothers today. They're down 5% because the orders are up, but the prices on the homes are down.
Yeah, housing has been on a recovery
Right.
of late, and that's what's helping push the markets up as well. But Toll Brothers stock is down 4% today. Yeah, orders up, but the problem is that the average selling prices are down. At Toll Brothers, Lisa, they make the luxury housing units. And it's not across the board because if you look at the first-time buyers, such as D.R. Horton or
Right.
Pulte, average prices are up for that sector.
Right. Let's look at we've got housing stocks here. We get them up on the board here. Take a look at where everybody is. Oh, there we go. We've got housing starts. Yeah, housing starts have dropped 8.5% in January. That's the numbers that we're looking at now.
Some sort of mixed news there. But one thing that Toll Brothers is getting into is apartment rental business.
Right.
Now that's hot. A lot of private equities trying to scoop up housing on the cheap so they can rent it out. A lot of people, credit history is burned. They can't get credit. They can't buy, so they're going to rent.
All right, let's look at some of the competitors of Toll Brothers here and actually pull up some of the stock. There we go. We've got some red arrows there. The whole sector's down there. Lennar, KB Homes, Hovnanian, you can see they're down.
But again, the housing stocks have had a good run too. I mean, you look at Toll Brothers, it's up 55% over the last 12 months.
That's right. That's huge, yeah. All right, let's move on and talk about Total System Services buying the prepaid debit card company NetSpend. This is an enormous space here because we're talking about, I want to say cash is king, but it's not. It's really digital cash.
Yeah.
60 million people without checking accounts. So even if you have a small part of
That's
this
a big part
business,
of the population. Yeah.
It's a huge part of the population. Small part of the business is still a big business.
Right, and we were talking about NetSpend, which is a pioneer here on prepaid debit cards. Now, that stock is up nearly 30% today. Why? Because that premium that Total System is paying is 30% to its closing price yesterday. Now, TSS, Total System, says it wants to go into this business because it's been processing cards for others. It says, why don't I do it myself?
Right, exactly.
But gotta watch out, because with NetSpend, they're in a hotly contested business. The big boys are coming in, J.P. Morgan, U.S. Bank, and that's going to put pressure on that company, even though it's a pioneer.
A very crowded space, as you mentioned, with those banks coming in. All right, finally, let's close it out with some other big boys and girls. Martha Stewart, this is really interesting because the case goes to court today between JCPenney and Martha Stewart and Macy's, because she has these, Ron Johnson over at JCPenney, this boutique within a boutique. She's got a boutique in there. Macy's is saying, hey, wait a minute. She had a deal with us. She can't create anything for you guys in our exclusive categories. Even if she doesn't even put her name on it, we don't want it in your store.
It's all about who gets a girl. The two guys are fighting over it. Ron Johnson and JCPenney. And you got Mr. Bachelor number 2 of the dating game, Macy's CEO Terry Lundgren. He really was Bachelor number 2, by the way. And Macy's had that deal with Martha before, but Macy's is crying foul. It's suing, and this goes to the state Supreme Court here in New York. And the 3 are on the possible witness list, so 3 of them could possibly square off against each other. There's going to be a lot of bad blood, and Macy's is basically saying, listen, if it looks like a duck, quacks like a duck, it's a duck. It's saying, look, that Martha Stewart store that's going to be in JCPenney is going to be owned, staffed, and operated by JCPenney. Martha Stewart saying, hey, we never talked about standalone stores in that original agreement. This is a Martha Stewart store.
It'll be interesting, though, because JCPenney is so, Ron Johnson's really built this boutique situation. If she's out, then they obviously have to find some replacement for her.
They're going to have some big brand name tenant, because Martha Stewart is among the biggest brand names moving into that JCPenney so-called store within a store. It's not going to help, Macy's either if Macy's loses that exclusive business that it thought it had with Martha Stewart, because then JCPenney's will be competing against Macy's over a Martha Stewart brand.
All right, interesting case. Fred, thank you so much.
See if Bachelor number 2 wins.
Exactly. All right, remember to follow us on Twitter at Reuters Insider and get more videos at Reuters.com/ReutersTV. I'm Lisa Bernhardt. This is Reuters.